everybody. Welcome to Market Mavericks. How are you, Scott and Mike? How you guys doing?
Great.
Very cool. So let's get right into it, man. We do these 30-minute things, so let's not waste any time. Where do we start today? I mean, we got a lot going on. We got Bitcoin ripping to the upside. Should we touch on that? Scott, you want to give us a rundown?
I'm glad to talk about Bitcoin anytime, especially when we're talking about it going up instead of talking about it going down, because that was a very painful thing to have to do for all those years, right? We all had to continue to be bulls long term. But here you go. I mean, I'm just looking at a very simple pattern here, obviously, bull pennant, right? We had that low at 38,600. You got a flagpole, very clear consolidation, up, down, right? And a breakout to the upside. You could consider that to be a range as well. That targets around these 49,000 highs that we recently saw. So that's why, I think we could be going into that 48, 49, 50,000 range. Maybe we'll make a lower high and continue to consolidate. But I really think that this is on the back of this slowing of GBTC sell pressure that we've seen. Obviously, when we saw the ETFs approve, we all know that it was $700, $800, $900 million a day of GBTC redemptions then just being sent to Coinbase and literally sold on the open market. Now we're down to, 50, 60, 70 million, a tenth of that on a daily basis. So even with the diminishing inflows to the other products, we're just seeing a massive uptick, I think. And that's probably what's driving this behind. I mean, you look at the market cap now of these the ETFs right here, IBIT, that's BlackRock, 3.5 billion. I mean, this is a huge ETF already, right? It's been a couple of weeks and it's massive. GBTC Grayscale down to 21.36 billion. Fidelity about to hit 3 billion itself. And then you have all of these. I mean, 5 more of them are over 100 million. Objectively, even in a vacuum, huge numbers for any ETF launch. So I think that we're seeing the steady sort of demand coming in from these and decreasing supply, really basic economics 101.
Yeah, and I think. Oh, sorry. I was just going to second that in that I think you're right about the GBTC fading out, and then I also think that the risk-on environment in the stock market is just contributing, right? So you get less. That it's very possible that Bitcoin would have never had such a big corrective move with the risk-on environment in the stock market if you didn't have all that GBT selling. So I think you're dead on there.
Yeah, I like that selling fact, but right now it's up 17% on the year. GBTC is one of the best performing assets. If you look over at Tesla, it's down 24% on the year. And I wanted to tilt over one thing I'm looking for that might be just getting started is that Bitcoin to gold ratio you see in the right. It might be making that hook upwards. What's concerning me is it's taking newer and extended highs in risk assets and beta, the S&P 500, to pull it higher. And I'd rather see it lead the way up. And it's kind of seems like it's being dragged upwards. But it is going the right way. The problem is, as we mentioned earlier, it was put this way. Right now, the S&P 500 is up about 5% on the year. Just a month or two more of that, and you'll say, oh, it's been a great year.
What do you guys think about the economy right now? Obviously, jobless claims coming in today around 218,000. So, I mean, we've seen an uptick from below, but I mean, 218, 220 is still relatively low. The economy still, at least on the surface, seems like it's doing okay. But then again, so many private companies during earnings season this year, they're laying off 5 to 10% of their workforce. So, I mean, is that telling us something? One chart, in fact, before you guys answer, I just want to show here is I have a chart of delinquencies, and I do think that's worth kind of keeping an eye on here. So let me just bring that up now and just kind of quickly show that. But what we do have is one of these. The top one is credit card delinquencies already at 9, almost 10%. And by the way, at COVID's height, the high was 10%. So we are closing in on reaching that. And then you still see auto loans. They're upticking, but they're not astronomical yet. But again, let's talk about the economy. I mean, is there something going on here, or is it smooth sailing?
Well, I got some charts to show you that, and Scott, unless you want to go first.
You please.
So I think what I heard from Gavkel recently is it's a party like 1999. I clearly show that. And let's just look at container board. We used to call them corrugated boxes when I traded bonds in the bond pits. We always watch corrugated boxes. It's in white. It's absolutely collapsing. The demand for that. So anything you buy in Amazon comes in these boxes, and it's collapsing, akin to the same thing as the Great Recession. Also, a key thing is diesel. Diesel demand. Diesel is the fuel for the economy. The level you see here is the same as 2015 when crude oil averaged about $48 a barrel. We have never had a period this long and this stagnant of diesel demand in this country ever. Now, my database goes back to early 90s. It's just intuitive. You see that and you think, this is not an expanding demand pull economy. Yes, everything's tilted towards services. I get it, but good luck with that one. Typically is how it works. The key thing I want to point out is severe deflationary forces. So this is something, a metric I just put together. If you take the average inflation of the PPI, the latest PPI measures of US, China, Japan, and Germany, those are the top 4 countries in the world. It's minus about 3%. That's PPI, the PPI indices from those countries. And I overlay that with Fed funds. You see, this is Fed funds. We've never had Fed funds this high. I also show the expectations where market futures price they'll be. So a year from now, it shows Fed funds should be about 4% versus right now about 5.3%. We've never had Fed funds this high with PPI in the top 4 countries in the world running this low. And to show you that extreme, and I can pause anytime you want. It's like you had something there, Gareth. But
No,
I wanted
I'm
to
just listening, man. This is great information.
yeah, this is a metric I just kind of threw together, and it's just been really resonating with me because to me, the center of the universe, what's happening right there is right now is there's a Great Depression kicking in China, and I don't see what stops it. And so here I show, and that's why I included China. China's the second largest country in the world. Its PPI is running almost minus 3%. But if you average the 4 top countries on the planet, the adult countries, and we have India, which is a little more dicey, and their data only goes back 10 years. What I show you in white, if you take that average of PPI and you minus Fed funds, you've never been lower. Now, my database only goes back to 1993. Okay, it's 30 years. But it's never the last time it peaked this low was at the trough of the great financial crisis. Now I overlay this with commodities, Bloomberg commodities. Part of the reason I'm still very bullish, things like TLT, and I think yields are going is because commodities are just starting to head lower to this trend line, which means they have to drop another 40%. And this shows the global tilt is very negative. And I want to show you one key thing. I can pause here and refresh a little bit. And this is the inordinate burden of the U.S. stock market going up is what I show you in white. This is the S&P 500 divided by the MSCI ex-US index. It's all-time highs. But you can see it never really traded this strong and high until it broke above this high from 2001, right around just after the financial crisis, 2014-15, and then it's been straight onward. But that's the inordinate burden. If this does not continue, meaning it's got to keep going up for stocks, commodities, and inflation just to stabilize. If it just tilts down a little bit, we got a big problem. And that's why I look at it as the biggest risk in this country is risk assets have to go up. Or the global economy tilts towards severe recession, which is what I show you right here. So from a macro standpoint, I can pause. I can show you a few other things. But it's part of the reason I'm still bullish gold, bearish risk assets, and bearish. I think we're going to see much more deflation. Meaning, what is it going to take for commodities to go up and for inflation to really resonate higher? We have to have that stock market. It has to lift all boats. If it just reverts a little bit towards that gap I mentioned earlier, which I just showed here. This is the E-mini, still down 4,600. We obviously putting it in the distance. But if it just has a normal back and fill, just imagine the shakeup we're going to see. Just to do that, it'll be just a normal correction. But the higher you go, the less normal corrections are, and the more significant they become.
And Gareth, just to add to what he's saying, not that I am taking a bullish or bearish stance as a result, just to sort of add to it, you're talking about the stock market basically being forced to drag everything up with it, right? And if it drops, there's going to be a problem. That's really just a couple companies, right? So that are doing it. We said we have the 5 biggest tech companies that have already reported earnings: Apple, Microsoft, Alphabet, Amazon, Meta. 139.5 billion of combined cash generated, the highest ever. It's these 5 companies. So listen, you can take this either way you want. You can say it's incredible that they're generating this much cash, so successful, regardless of what we think of the economy. The consumer's obviously spending money if these companies are doing this. But what happens if they're not?
Right. So let me piggyback on that a little bit. That's a good fact. I'm glad you brought it out, Scott. The average consumer and most equities in the country are in very good shape. If you look at last year, we basically obtained $1.6 trillion of GDP growth in gross dollars, and it took 2.6 trillion of deficit spending to do that. To me, that's part of the reason gold is in that upward trend. Every time it dips, it gets more and more buyers, and the rest of the world sees that. It's an unsustainable trajectory. Now, yes, where corporate earnings are great, but not in the rest of the world, only in the US. And also, I like to point out how expensive is the stock market versus maybe gold. It's the lowest since 2005. So good, almost 20 years there.
That's incredible. And I think it's important to recognize, I mean, how crazy it's gotten, those 6 companies. I mean, taking even Tesla out, they basically, if you combine their value, they would be the 3rd largest country of GDP in the entire world after the US and China, which is, again, I mean, think about that. You know, you can even combine a bunch of them and it's still incredible. Like, you know, Japan's 4.23 trillion, and that's the 3rd. And here you have the mega cap techs, probably I'm guessing 12, 13 trillion at this point based on current valuations. You know, it just in that same tone is the rally, and I'm showing this M2 money supply, right? So we could clearly see in 2022 that was basically when M2 fell, and it's flatlined since then. Is this long-term trend of M2 one of the key culprits for why asset prices have just had such the run that they have over this period?
Well, global M2 is rising, right?
Right.
I have a chart of that. Of course, that we know that's largely China or whatever's happening, and it really only matters what's happening in the U.S. But even as we were still seeing declines in M2 in the United States, we were seeing a flip already, you know, halfway through 2023 of global M2 increasing. Actually, this chart is for some reason not updating. It's still stuck back then, giving you the same idea that. And so I do think that there has been some liquidity. It just might not be where we're all looking.
Yeah, I guess the question then would be is like, is this all based on real growth? Like, have things gotten that good, or the general? I feel like if you talk about, you know, if you go talk to 10 people on the street, a lot of them would say things have actually gotten worse, at least in
Everyone
the
would.
US. Right. So
Everyone would.
then why are asset prices where they are? Is it because there's just been so much printing of money going on and it just inflates asset prices?
Yeah, well, I'm pulling up the chart, and I'm just working on it right now to pull up the change in M2 since 2019. The end of 2019, I believe, is about 35%. So let's just see how that's done with S&P 500. The only SPXT, the total return S&P 500. This is, you know, the biggest pump in liquidity in the history of mankind. S&P's up 60%. Now that's awesome. Bitcoin's up a lot more. But let's look at MSCI EX-US. Let's look at MSCI X-US index. MSCI UX index. Okay, not really finding it, but we'll just try this one. It's pretty much American exceptionalism right now. It's up only 29%. So everything was up, should be up at least 35% since the end of 2019. If it's not, that's a sign of deflation. So let's do this. Look at commodities. BCOMSSP. Let's look at commodities. They should be up. You know, and like every expense you have, it's just we threw so much money out of it. It's going to pop up in a second. And those commodities are right there, right at 35%. Here's Russia's invasion of Ukraine, and boom, we're right back down. So it's where we go from here. And it's just let's see, the 2 books, 3 or 4 books. The ones I remember recently is The Price of Time and Boom and Bust. And the rules of liquidity pumps that dump are never really good. Now, to me, the prime candidate right there, right now, is what's happening in China. And that's why I show these charts like this, PPI, and you know, just plunging versus Fed funds. And China is, I don't see what's going to, I see the headlines every day. Recently, they just replaced the regulator, and it's unique. It's so much like everything I read in Atlas Shrugged. Everything I hear from Z is doing exactly the same thing that it was made fun of in Atlas Shrugged by Ayn Rand, where so he pushes back on Jack Ma, he embraces Vladimir Putin. Now he's getting mad at his regulators for stock market going down. Duh. So to me, that's the macro, but the U.S. exceptional is a question of how long it's going to last. And that's my point, is the amount of risk we have to the U.S. just kind of pulling back a little bit is the most in the history of probably our country, at least in modern times.
It's wild.
Gareth, did you see the fact that this was also, I read it on Bloomberg, that there's an outside interest in options contracts that provide upside exposure. So basically, people are betting aggressively with calls that there's going to be more upside, making puts exceptionally cheap, which is yet another sign that we're in that greed phase. I'm not going to say that means that there's going to be a squeeze, that things are going to go the other way, but you can see people are lifting their hedges, they're flipping to calls, they're getting really, really, really bullish. And this is what the S&P pushing 5,000. I mean, this is just crazy. Yesterday, 4,999.89, but can't break this psychological level. It's wild.
But it's classic human nature. You have to be in it. They have to buy those calls. They need that positive gamma goes up, because if they don't, if you're not, you get fired and you get hired by someone else who's in it. And it's just classic way things. I remember those I was way early in 99, is way early in 2006, and I've been way early this time. But that's what's different this time is I've never seen an imploding country like China. Actually, I have Japan, but they never supported a war like Mr. Z did.
Yeah. And I think the divergence between the Chinese, I mean, you're talking about the second largest economy versus the first, and to have such a disparity in stock markets is really rare historically. If you look back, again, wild stuff right now. And it's again, you look at these even numbers, you brought it up, Scott, and historically you look at these even number pierces as sometimes that's what creates the top, because it creates, essentially it stops people out. A lot of people will naturally, shorts will put their stop right on that even number pierce, stops them out, which is buying. And then the last people, if you were on the fence a little bit and you see all the headlines that, mainstream media is going to pump about 5,000 close on S&P, it gets the last group in, and oftentimes that can be a top. So psychologically, it'll be interesting to watch here. And I bet either today or tomorrow we close above it. Oftentimes into the weekend, that's when you get the max amount of exposure in the media.
Yeah, well, as we're speaking, I'm pulling up the Hong Kong Shanghai index. It's going to come back in a second versus it's updating. I just did a max on it. It's the lowest since 1975. Chairman Mao was the president then. He died in 76, and then we had Deng, changed the whole world. That is a depression kicking in. Now that's severe wealth destruction. It's going to bounce, guaranteed. They'll make it bounce. The question is what happens in the aftermath of the bounce. But the key question is what's the trickle down from there. So that to me is going to be the biggest story this year. And the key thing is it's only been less than a year that the whole world was this was going to be a rebound. So I guess I shouldn't focus on it too much. But to me, it's the primary story this year. And I mean, just read the book The Party. I've read a couple other books. I'm kind of done with my China research, I think, because I've already decided. I think it's combination Japan, Scott, Soviet Union, that was struck. But the question is what happens there, and to me that's the wealth destruction. A lot of that's going to gold.
Mike, one quick question I have is if you look at the U.S. economy or the U.S. stock market and the China market, are you in the camp that the U.S. stock market, and I think you are, eventually pulls back, but then does China catch a bid on that? Does money flow go back to China, or do you think China just goes lower when the U.S. market sells off?
So that's the issue. When the U.S. market sells off, everything goes down. That's what be wonderful to see. And I didn't say if it's never going to go down again, okay, that would be wonderful. But when it does, we have to see how Bitcoin reacts. I fully expect it's going to go down with the normal high beta that it does. We might get some of that divergence because China is such an insular market, and it's so controlled by the government. But overall, we all know when the S&P 500 goes down, it's the most powerful force on the planet for all financial markets. So it's not an if, it's a question of how high do we go before the correction, and do we go back to that normal gap that we always get around 4,600 E-mini. So that's why I look at it now. This is parting like 1999, and it's like Roger Babson said in 1929. He said, I'll tell you the same thing I said last year and the year before when he was talking about the stock market going down. And, you have to be ahead by a few years sometimes, and it has to rip your face off. And like Scott says, people have to buy calls to get in. And then it's all over. But the key thing is what I pointed out in this first chart is these signs of severe deflationary, depression, recessionary forces in the U.S. are severe. We've never had diesel demand stagnant for almost 9 years, ever. It always goes up. Maybe not, it didn't matter during the Great Depression because it was merely, most motor fuel back then was from animals. But that's where I'm concerned that stuff like this is second largest economy, and in the Europe's basically recovering, and people are basically in recession. People keep talking about recovery. I'm like, from what? If you have at this point, let's say a year from now, we've had 100 basis points of rate hikes, cuts in all the countries, then you can discuss potential recovery. But that's just the point of the cycle. We're so way far ahead of a potential recovery. You have to have the trial, and that's what's happening in China. We're getting it. In the U.S., it hasn't even started a peak yet. We haven't, so it keeps going. And then here's the thing I'll end with. Here's the question: is why would the Fed be in any hurry to cut rates in this environment? They might be accused of goosing the market and creating a bubble that they never want to anyplace.
Barkin just said that. Richmond Fed, Barkin, and they've always said it. I don't understand. I say this every week, but like predictive markets think there's a cut coming tomorrow every single time. They thought it all of 2023, 4 cuts in 2023. They still think, they still thought March until a couple of weeks ago. Now that's a low percentage. And now they're saying May. Well, why would the Fed cut? Maybe they'll eventually cut in May, June. I don't know, right in front of the election, right after the election. But why would they cut if these numbers are real? I think we all know the numbers are goosed, but
especially with the stock market a stock market that's essentially stimulating just by going up the amount that it's going up. I mean, that's stimulative. The government spending is stimulative. It's all stimulative.
Well, it's not so bad. Let's look at it this way. I remember it was our economist Anna Wong said, I think the number was 6 to 7% of deficit in spending last year, but I love to use the gross number. We did factually get $1.6 trillion of nominal GDP growth and $2.6 trillion of deficit spending. That's a shocker. I look at that, I'm like, okay, well, probably should be buying a little gold, and that's what people are doing in that environment. I mean, that's unsustainable. And Bitcoin, you can't have gold anymore without Bitcoin in that space. It's just Bitcoin's so much more highly volatile. If we get that normal recessionary correction, you want to be able to see it, outperform, but we just haven't, it's such a laggard lately.
So one thing I want to ask you, Scott, is so we have Bitcoin making a good move today. I was just looking at like Ethereum, and Ethereum's kind of sitting there. It had a little uptick earlier today, and it kind of came back in. So it seems like the alts are lagging here. Do you think the alts will play catch up at a certain point, or is now that GBTC is kind of done, this is Bitcoin's show?
Also play a catch up. Look, here's Bitcoin dominance, which effectively shows you, and this isn't something that I generally chart. I just look at it to understand what's happening. But Bitcoin dominance, this is showing you basically if Bitcoin's percentage of the market is rising or falling, which means is liquidity coming from alts into Bitcoin, or is it going out from Bitcoin into alts? Sort of the risk on that we were talking about before, but very insular to the crypto market. When the crypto market itself goes risk on, people sell their Bitcoin, flow into alts. When it goes risk off, they go back into Bitcoin and get out of their altcoins. Well, it's rising hard, right? So usually what we see is Bitcoin runs, then it gets boring, then dominance drops, and the money flows into altcoins. But it is interesting to look at ETH BTC. This is a weekly chart, but it made a nice move, yesterday. I mean, maybe we zoom in on the daily. I think it was, 2 days ago. Everyone was getting excited about ETH again, myself maybe included, and then drop, right? And it just can't seem to gain any traction yet. I think, maybe an Ethereum spot ETF would start that narrative again. But right now it's the Bitcoin show. And I think it should be, right? Bitcoin has all the narrative. You are getting huge moves in certain places in the altcoin market. But as a whole, unless you're really good at picking those winners in real time, you just want to be sitting in Bitcoin right now.
We got to point out the most enduring bull market ever in crypto, certainly since 2018, is Tether. It's almost $100 trillion now.
So you want to talk about that? I literally just got off an interview with Palo Arduino, the CEO of Tether, 5 minutes before I did this. And you might have seen their 2023 attestation. They made $6.2 billion last year. That's more than BlackRock, Netflix, right? Uber, Goldman Sachs, every other company. With the most boring business model in the world. Mint $1, take that dollar, put it into these United States treasuries that are yielding, 3 to 6, 5%, whatever the number is. Parking that cash, and then with the excess, buying some Bitcoin and buying some gold and investing in AI. They now have a reserve on top of their fully backed, a company reserve, totally different, over $5 billion. And that's been growing now because Bitcoin has gone up this year. It's an outstanding business, $96 billion market cap, and no reason for that to literally ever go down because the world is going to hell in a handbasket. And I'm not talking about markets. I'm talking about if you live in Venezuela or Brazil or Argentina or Lebanon, you need dollars and you can't get them. So you buy Tether. You don't even know what Tether is. You call it USDT and you call it a digital dollar and you go about your life. And the traction that we're seeing in those countries, in Nigeria, the usage, it's becoming a part of the mainstream economy there. It's crazy.
It's a combination of that and revolutionary technology. It's unstoppable. I mean, it hit, like I said, it hit me hard 6 years ago when I was in Hong Kong, and all I kept hearing was mainland this and mainland that, and that was way before the protests and everything, and it's just resonating over. Also, the key thing that really sometimes makes a difference, and you certainly know markets, you got to have complete disdain to be brave enough to believe in something and buy something. And the disdain I've heard for Tether since its whole career, certainly from Bloomberg journalists, has been extreme. And then I also point out, well, it's like, it's a talking chipmunk. I remember from Alvin and the Chipmunks. It's just it's unprecedented.
And now, listen. I see someone literally in the comments right now. It's going to happen. I don't blame them. Why don't you do a full audit? They can certainly pay for it. Are they worried about showing liabilities? They're solvent now, but why not be open? First of all, they're never going to be open about what they did in the past, because we all know that they probably weren't fully backed at the beginning. But the CEO of Cantor Fitzgerald, Howard Lutnick, you're talking about one of the most powerful financial institutions on the planet, one of the most powerful people. This is a Larry Finkish character saying, I've seen it. We are holding them. It's backed.
Yeah.
Right. And this is a full attestation. I don't understand that FUD anymore. These guys are literally printing money. It would be the dumbest thing in the world. And you can see where all the money is. Look, Cantor Fitzgerald is like, I have the money, guys. I have it. Right. So come on.
Cool. I just want to pop in here, and you were just talking about ETH. Take a look at these two trend lines. So you have this base trend line, and look at the parallel line right here. And so if you're looking at where ETH could really get some legs, it needs to kind of take out, at least according to my chart, this 2480 level. You get above 2480, you should trade back up to the high end. And again, notice all of these lines are parallel, and so you really have something going here. But yeah, that's why it looks like it stalled out right there and kind of got pushed back down. Another chart, just as we're coming to the end here, I just want to quickly touch on is take a look at this little wedge pattern that broke out on Cardano today. Pretty nice little move above this little trend line, down sloping trend line. So you do have some positives. I mean, some of the alts are kind of stalled out, but a few of the alts are actually showing some life here. So interesting to see that.
The Cardanites hate me today. I don't know if that's what you call somebody from Cardano, but I'm going to call them Cardanites because I think it sounds cool. Because I had Tom Dunleavy on, analyst 2 days ago, and he made some flippant comments, which apparently I didn't like, pull out a gun and shoot him through the screen for daring to disparage the Cardano community. But man, these coins are all going to go up eventually because they have passionate communities. Oh, he was just basically saying that, I think he was comparing it to Solana. I literally don't look into it, so I have no idea. But there are plenty of these coins that are going to continue to go up at some point because there's a lot of people that are very passionate about them. Like to your point, by the way, this ETH, there's nothing bad about ETH, certainly on the USD pair. It's just lagging. You just rather be in Bitcoin. That's literally it.
So what's one of the benefits that ETH has a dangling carrot going for? We know at some point there will be ETFs. It's undeniable. They'll use the same arguments they did to get the Bitcoin ETF. And it does have what you might consider earnings. That's the problem with Bitcoin. It's more, yes, you have to get over that hump that there's not that compounded earnings factor that you get in normal equities. And that to me is a key thing that you point out is we're seeing alts catch up to Bitcoin, but an environment like this, they should be leading. And that's the problem I have with the Bitcoin Gold. That's why I'm showing the macro is still very bad. And you have to expect liquidity pumps, and the Fed said it, and markets going up like this, and there's every day market goes up like this, there's less hope we're going to get the pump from the Fed. Why would they take the risk? It's silly.
I want to say something about what you just mentioned really quick to piggyback on that. The Ethereum spot ETF, I don't know if you guys saw, but ARK updated their filing. They did cash create a lot of the things that were in line with what happened in the process for Bitcoin. But one thing that they did that was very, very surprising is they actually talked about staking ETH inside the ETF, which is something that exists in the ETCs or ETPs. I believe it's specifically an ETC in Europe, which you have staked ETH. So imagine an Ethereum spot ETF where you're also earning a yield on owning that ETF because those coins are being staked. That's a very valuable proposition.
It's just a matter of time. Unfortunately, I've been saying this for 6 years now that we have ETFs to track a broad index of cryptos. That's the proper way to protect investors, I think, if we're going to stick by what the SEC says here. It's just taking forever.
per usual.
There you go.
Kind of their thing.
Yeah. All right, guys. I think that's a great place for us to stop. You gentlemen, it's truly an awesome show today. And let's reconvene next Thursday if you guys are down, and we'll give the people again another show.
I'll be here. Let's do it.
Awesome. Have a good one, guys. Thanks for watching, everybody. Talk to you later.